The last 50 years have seen unprecedented changes on our planet. Billions of people have been pulled out of poverty, reshaping the human experience. But this march towards progress has come with a downside. Modern civilization has been built on fossil fuels, the effects of which are threatening to roll back many of the gains of the last few decades. Developing nations in particular are practically choking to death due to emissions caused by industrialization, while the planet's climate is changing in ways no one could have imagined even a few short years ago. One of the most obvious solutions is the increased use of nuclear energy. Today, over 60 reactors are under construction globally, while dozens more are planned in places like China, the Middle East, and South America. But this boom in reactor construction hasn't yet impacted the price of uranium, the fuel reactors use. Uranium has had one of its worst starts to a year in a decade, with prices down more than 20%. However, with dozens of new reactors coming online over the next 5 years, demand increasing dramatically for clean, cheap energy due to global climate change agreements, and cheap uranium prices, there's an incredible opportunity now for savvy investors. One of the most compelling investing stories in the energy space is GoviEx Uranium. With nearly 200 million pounds of uranium in the ground, spread throughout projects in Niger, Zambia, Mali, and Namibia, GoviEx has one of the largest resources of any exploration or development stage uranium miner in the world. But despite this remarkable achievement, the market hasn't been kind to GoviEx. To find out why, Tommy Humphries, the founder of CEO.CA, recently sat down with two company executives, CEO Daniel Major and Director Christopher Wallace. He began with Mr. Wallace, asking him what makes GoviEx unique.
There's a lot of things that are unique about GoviEx. I would say probably the most interesting to me unique feature of it is its size. Of the development stage miners publicly traded, GoviEx is the largest with just about 200 million pounds in the ground. Size matters in all businesses, and it particularly matters in the mining business. So with that huge of a resource, that was something that really attracted me to it. But other unique attributes, we've got excellent management. Daniel Major is our president and CEO and is an extremely competent technical miner. He's an excellent businessman. He's a brilliant penny pincher. As a development stage uranium miner, those penny pinching qualities are extremely important right now. But for our future, we hope to be mining in 2020, and that's where his technical competence is really an asset for the company.
So what is the investment thesis with a 8-cent GoviEx and a 15 million market cap?
Well, it's a very interesting thesis because at those two metrics that you just mentioned, Tommy, we are significantly undervalued relative to our peer group. At those metrics, we're trading at 10 cents a pound of uranium in the ground. The average development stage company is trading at 50 cents a pound in the ground. So that's 5 times our present value. So the real question is, should we trade at the same level as the peer group? And I think the way you look at that is you have to ask yourself, are you comparable to the peer group? With the various factors, do they argue for a premium? Do they argue for a discount? And I look at those factors and I see a lot of reasons for premiums. The fact that we're the largest resource, I think, argues for a premium. The fact that our costs of mining are $24 a pound, I think that considerably better than the average, and I think that argues for a premium. The fact that we have an extremely seasoned and notable shareholder list. We've got Toshiba, the giant Japanese electronics corporation, which owns Westinghouse, which is one of the largest nuclear reactor manufacturers in the world. They're a significant shareholder. Cameco Corporation, the huge Saskatchewan-based uranium mine, one of the most successful in the world, is a significant shareholder of GoviEx. And then Ivanhoe Industries, the sort of private company side of mining magnate Robert Friedland, is a shareholder. His son Govind is a significant shareholder and is our executive chairman. And we've just completed a transaction with Denison Mines Limited, the big Canadian mining concern, whereby we're acquiring their African assets, and in exchange they'll become our largest shareholder with 25% of the shares.
So there's no question GoviEx has a lot going for it. But the collapse in the stock price from $2 to under 10 cents is an event that needs more clarification. Tommy turned to GoviEx CEO Daniel Major for the explanation.
GoviEx has one of the largest uranium resources of any company in the world, and it has an incredible shareholder registry. But when you look at the stock chart, Dan, I have to ask myself and you, what's gone wrong?
From a company point of view, nothing has gone wrong. We've done absolutely everything that we would say we would do as a company. We have gone through, in the last 7 years, from exploration through development of one of the largest resources on a single project. Now it is fully permitted and ready for construction. So from a operational point of view, nothing has gone wrong. We've done a great transaction now with Denison. So now we've increased our total pounds in the ground to one of the largest resources of any public company, with over almost 200 million pounds in resource. I think what we've failed to do is engage the market. That's been the biggest issue that we've struggled with, and we've been so focused on what we've been doing, and that, I think, ties through into that valuation. We looked at ourselves, and as well, we were a single project in Niger, and I think people had their discomfort of Africa in general, but more importantly in parts of West Africa. And that was one of the reasons why we felt very comfortable by expanding that portfolio and bringing the Denison assets in, because it spreads the risk and brings in countries and regions that people are more accepting of. Mali, one of the largest gold producing countries in the world, and Zambia, obviously, with its large copper production. So I think those are the things that we've looked at strategically as well and said that's the way to balance us. Going forward, it's going to be a case for us as getting this market up, which is why you and I are talking now. The market needs to understand where GoviEx is, what its strengths are, what the benefits are going to be going forward. We have 2 permitted mines. This is a cycle that every analyst is saying is growing. Price is going to go up. Well, you want the mines that can be built, the companies that have already permitted and can go into construction. So the failure for us is really the dialogue. I don't think people can criticize us, and certainly our existing shareholders have not criticized us for what we've done from an operational point of view. We've met every target we'd ever told them we were going to meet. The criticism is we haven't been telling enough people.
In your defense, you had the Fukushima nuclear disaster working against you and a mining downturn. But when I recently pulled up your share price, I was very surprised, because we've met and discussed your story. It was a multi-dollar stock, and I've always admired the progress the company's been making. But it really has been a fall, and I think from here, it's certainly a very compelling risk-reward story. So I want to talk a bit about that.
Yeah.
What exactly does GoviEx have?
GoviEx has now 3 major projects. We have over 200 million pounds, of which 120 million pounds is actually measured and indicated. It's got a company that's had over $200 million invested into the ground, and that's practically 50% into Niger and the other 50% into the other 2 assets. You've now got 2 projects that are mine permitted, one in Niger and one in Zambia.
The main asset, Maduela in Niger. Let's talk a bit about it. What should watchers understand about it?
Maduela has 110 million pounds in the ground, of which almost all of that is in measured and indicated. So the first 10 years are actually already drilled out from the project point of view. It has a cash cost forecast at about $24.50 a pound. That's about the cost of an ISR. But the difference is over 20 years of mine life sitting there with a lot of potential. We have the same structure as Areva, who are next door to us. We're actually sitting on the same structure. We've actually never drilled between ourselves. So potential to expand from that point of view. And as I said before, it's fully permitted. The next step for us is securing that financing that allows us to construct that mine.
What's the capital required to build a
Total capital is $359 million according to the PFS.
US?
US.
And when do you target production?
We're targeting production for 2020. The way we're looking at this thing is that when we look at most analyst curves, industry analyst curves, 2020 is the point where the demand pickup against the supply drop-off really bites into. And different people have it in different places around that point. But from where we are, it's about by the end of next year, our view is that we can finish the financing structure. Right? That's about the time that the export credit agencies and the banks would work their way through all of the process. We're looking at working on the offtake and the equity side on that as well. And that would allow us to start construction in 2018, 2019. So we give ourselves a 2-year window for the construction. Means 2020, we're in production, which is when most people believe the price gap on the supply and demand has really opened up.
So you guys drilled 600,000 meters, I recall, in 12 or 13,
Yeah.
and one of the largest drill programs in the world. How long of a life does the project have?
It currently has 21 years based on that drill program. And as I said, most of that's already drilled out to a measured and indicated, and most of it to a measured basis. So we stopped in 2013 simply because we already had 100 million pounds, and the board's decision was we have to de-risk this. If we made this 200 million pounds, great, we have a bigger resource, but if you can't make it work, then there's no more point in having it bigger. So our focus since 2013 has been on the economic side of this project and proving to ourselves and to the market that this project can be built. Our break even is $48. And certainly our information that we're getting talking to the market is that from 20 to 25, there are floor term contracts available, floor term contracts at $50 to $55. So at that price, if we can secure those kind of contracts into this project can be built in 2020.
What's the long-term plan for GoviEx?
Long term, we are going to be a uranium producer. I mean, that is what we're targeting. We have Madawaela, we then have Matanga, and Falea is about 3 years behind. A highly advanced project, but it needs more work. If we meet the plan, then over that 9-year period, then you would be looking at a company that's producing 10 million pounds per annum from 3 projects in Africa. That's what we have to plan to go forward. And all of them have exploration upside to keep pushing forward as well.
Very significant.
Absolutely.
Tell me about some of your shareholders.
It's been a fantastic build for this project, and I don't think you'll see a company with such interesting shareholders in. I think the ones you're talking about are the strategics more than anything else. Cameco came into the company back in 2008. They saw the benefits of the property that we had, and they were one of the very early investors that came in, and they've been very supported all the way along. After Fukushima, Toshiba came in. They own Westinghouse, which is one of the largest reactor builders in the world, and they were looking for long-term offtake to feed that business that they have there as well. And they're holding about 15-16% of the company at the moment. They've been great shareholders. They're looking to the long term. More recently, Ivanhoe Industry came in. They did a review of major projects around the world in multiple commodities, and we're looking for the best projects with the best value. And then they came to us and said, well, actually, we'd like to be investors, and we happened to be doing a financing at the time, so we said, absolutely, love to have you guys on board, because obviously they bring the benefits that come through the Ivanhoe, their understanding of developing mines and building mines. But more importantly, I think now the Denison deal brings Denison with it and everything that brings. We found the Denison team to be absolutely excellent guys to work with. Their technical know-how is great, and we're able to continue to leverage off that technical know-how. It gives us a sounding board on our own projects that we can go back and say, listen, where we're going, guys, what are your views? Can you add any value to what we're doing? So, you know, with those kind of industry leaders on the book, we have to be in a great position of strength going forward.
Tell me about the chairman of the company and founder. That's Robert Friedland's son, Govind.
Yeah, Govind founded the company. He had the foresight to find this project. It was brought to Ivanhoe back in 2006, 2007, and he realized there was a great opportunity. He liked the uranium story. He was living in China at the end and was fed up of coughing his way around the parks of China. And he realized that there was an incredible opportunity here. He's a geologist by background, and therefore realized that this was a play. And it's his foresight that really brought this project, Madawaela, straight into the company.
He's also been instrumental in raising the money. And
oh, absolutely. I mean, he was the CEO until just before I joined, and has been instrumental in bringing a lot of those partners in. He brought Cameco on board. He was the guy who pitched it to Cameco. He was the guy who pitched it to Toshiba, and has built the structure that we've got. So, you know, a lot of kudos has to go to Govind getting the company to where it is. And he brought me in really because the company had changed from being an exploration company to being a development company. My background is a mining engineer and a project builder and an operator. And so, you know, we now max those across each other, doing slightly different roles in the company. My is to go forward on the projects themselves.
So the valuation of GoviEx after the Denison deal is about
$14 million.
Canadian.
US. And that's 10 cents a pound in the ground. If you look at our peer group, the average, including ourselves, is 50 cents a pound in the ground. If you look at our comparable peers who have got projects, advanced projects, not as advanced as us and size, they're trading at $1 a pound in the ground. So clearly there is a massive disconnect between our value where it is today and where it should be. And I think the first surge is going to be back, as we discussed earlier, just getting people to know who we are. We've done all the hard work, we just haven't forgot to tell everybody else we were doing it. So we see that really as a big uplift that will come through, just getting to explain people that, here's a project, it's ready to go. 2 projects are ready to go. It has this enormous resource. And if you believe this cycle is going to turn, then surely you want to be looking at the projects that can be building into the cycle and generating cash flow. And one of the things I've always said going around is people go, why Niger? And I said, well, you get stuff done in Africa. You can get projects permitted. We got our environmental impact assessment permitted in 6 months. We got our mine permit done in 6 months. I was doing a review of Canadian projects, and the quickest that a project's been done is 7 years, which was Rabbit Lake. And this was from a lawyer's documentation. The longest is Cigar Lake at 23 years. So it just shows you the differential of how long it takes to get stuff permitted. That doesn't mean we do things wrong in Africa. My documentation has to be fully up to equator principles. I have to be able to present that to an international bank and funding agency to get the funding I need to do that. And, we're not loose on any rules. We follow every international standards. The difference is, somewhere like Niger, where 70% of the exports is uranium, they know it's in their best interest to get these mines up and running and built. So we get a lot of support from government to move to the next stage.
Thank you very much, Dan. Good to see you.
Thank you, Tommy. Much appreciated, and thanks for the questions.
Given its proven uranium resources and its incredibly low valuation, GoviEx is definitely one of the most compelling high-risk, high-reward stories in the junior market today. Executing on this potential will be the challenge for the company's management moving forward. Follow GoviEx Uranium in Canada under the trading symbol GXU and visit goviex.com for more information.